The disinflation and deflation is chronic. You have been so good over the years about the chronic condition. Give us an estimate of the chronic nature of our dearth of aggregate demand, of our diminished inflation, and what it means for all of us listening and watching.
Well, given the severity of these US, European, and global recession, of course, there are now deflationary or lowflationary pressure, slack in goods markets, in labor market, in real estate, in commodities, and that's going to continue for a while. However, I've pointed out that if we're going to keep on monetizing fiscal deficits for years to come, because we're effectively in MMT, and if we're going to have negative supply shocks, supply chains are being disrupted, we're going to have reshoring, we're going to have balkanization of supply chains, deglobalization, and so on. Eventually, these negative supply shocks with loose monetary and fiscal policy can lead us down the line 2 years from now to stagflation, recession, and rising inflation. So short-term deflationary pressure, but over the medium term, we will have the opposite problem.
But, Nouriel, what does that mean? I mean, if there's an inflation concern, is it the bad type of inflation? And does it mean that actually monetary policy and fiscal stimulus needs to be paced?
Well, if you have negative supply shocks that are coming from deglobalization, balkanization, reshoring, protectionism, and other policies that reduce potential growth and increase cost, like in the 70s when we had two negative oil supply shocks and we had loose monetary and fiscal policy, we ended up with stagflation. Eventually, it's not a problem this year or next year, but we could end up in a situation of stagflation. And some markets, like expectation of inflation and gold prices and break-even, are suggesting that parts of investors are starting to worry that eventually inflation is going to rear its ugly head a couple of years down the line.
What does it mean for stocks? Are we going to have a huge correction before then?
Well, in the short run, the correction depends on other risks. There are many risks right now that have led already to a 10% correction in September after the rally we had through August. We had a second wave that's still high and rising. We're going to have a third wave in the fall and the winter. Looks likely we're not going to have a vaccine until sometime next year. We have a risk of a massive fiscal cliff in the United States. The growth in the third quarter looks like a V, but already estimates suggest that by fourth quarter it's going to be closer to zero, a U. And a U could become a W, a double-dip recession, if we don't have a fiscal stimulus, if the third wave is massive, if we don't have a COVID vaccine in time by the end of this year. We may have a rise of bankruptcies, of default, a credit crunch in the banking system. We have now this massive risk coming from U.S. election that is bearing down on the markets. Right. We have rising China-U.S. tensions. We could have hard Brexit. And in the Middle East, I would not be surprised by an October surprise, a conflict between U.S. and Israel on one side and Iran.
Right.
Trump is behind the polls. He might have a wag the dog attempt to create some trouble even in the Middle East. So there are 10 risks out there that are bearing negatively on the market. No surprise, markets already down 10% in September.
Nouriel, in the time that we have, I want to note your being born in Istanbul, your heritage in Iran and Italy as well. I want you to comment on the instabilities in the Levant right now, and particularly the future of Mr. Erdogan. I have lira out at 7.79. I don't know when it breaks and really unravels, but what is your estimate of the political fragility of Mr. Erdogan?
Well, there are, first of all, economic and financial fragilities. You have a situation in which you have a rising fiscal deficit and quasi-fiscal deficit that's still very large, current account deficit. The refinancing needs are massive. The net reserves of the central banks have been negative so far until recently, yet policy rates going down and macroeconomic reforms are not occurring. And on top of it, of course, you have the geopolitics and the politics of the country and the region. And there's no wonder that right now, given the amount of foreign currency debt of the private sector, real estate companies, banks, corporates, that if you have a further fall of the lira, you'll have massive balance sheet effects, risk of defaults and bankruptcies. So Erdogan is playing with fire, of course.
Nouriel, how should Israel respond to the legacy of Mr. Erdogan of wanting to be more assertive in the Eastern Mediterranean and generally in the Islamic world? Should Israel just ignore it, or do they need to have a policy prescription?
Well, the policy prescription Israel is trying to build up relationship with other Arab states. There has been a beginning of a peace process with some of the Gulf states. Many of these Gulf states, with the exception of Qatar, are not in favor of Turkey, but they're actually rival, because in the Middle East, you have a rivalry between three major powers: Turkey, Egypt, and Saudi Arabia. And they're trying to figure out who's going to have the hegemony over the Islamic world. Therefore, Israel has a strategy of supporting Egypt and supporting the Gulf states.